Okay, so good morning, everyone, and welcome to another COVID-19 Small Business Centre webinar. I'm pleased to have both Piers, Mummery, and Howe from Natwest on today as we start talking more about financial planning through COVID-19 and business recovery. This webinar is going to be a little bit interesting because we're going to be talking a little bit around the current situation in the UK with the financial solutions, but we're going to focus this session more particularly around how you can start to model your business as you start to come through into recovery. So before we get into this, I'd just like to introduce my expert panels. Nick, how are you? And just tell the world a little bit about who you are and what you do.
Yeah, thank you very much, Ketan. So, Nick Howe, I'm Enterprise Manager for Natwest. In a nutshell, I'm working with a whole host of business organisations that support various different business communities. So, it might be councils, universities, enterprise agencies, associations, etc. Obviously, a lot of the time in normal circumstance, that's in person. But we're doing a lot of different clinics and Zoom webinars and things at the moment, but all to do with aiding those thinking, starting or growing businesses and trying to tackle some of the key problems and challenges that get thrown their way.
Brilliant, and it's a pleasure to have you on, and thank you for coming on so many of our sessions so far, and all the expertise that you're bringing. So thanks for being there. And alongside you, we have our resident expert, Piers Mummery. Piers, good morning. How are you?
I'm very well indeed. Thanks, Ketan. Good morning to you as well.
Excellent. And again, for our audiences, just a little bit around your background and what you do.
Sure, absolutely. So obviously, Piers Mummery. I'm the UK managing partner for Tech CXO, which is an on-demand part-time director service for growth companies. Mm-hmm. So I work with typically scale-up and growth organizations in the technology and technology-enabled spaces. And I'm working with boards and owners and entrepreneurs to effectively advise them on how they should grow. My background has been an entrepreneur for 20 plus years. Mm. So I've built companies, scaled companies, bought and sold, raised money. And this is now my fourth downturn, which we're entering. So I call myself a seasoned veteran of crisis. So just delighted that, there's so many businesses out there in need of some help and support, and, just delighted to help and get involved. So that's me.
Fantastic. Thank you both for joining us on this. And I'm going to kind of put it into context with what's going on right now. I've been, reading reports and about we're looking at a V kind of shape when it comes to the economy in terms of, hitting a recession and looking at GDP growth kind of going down and then bouncing back up. Today, I think it's been fairly optimistic or positive, the type of news that's kind of come out. There's, words of mergers with Virgin Media and O2 coming together. And they're also talking a little bit more about how if you compare this pandemic and what it's done economically for banking and the banks, it's going to be a better, stronger position as we start to move forward. Now, last week a couple of weeks back, we were talking around, the business support services that the government was setting out. Rishi Sunak the Chancellor is thinking about ending the whole furlough thing around, and the job retention scheme around the end of June, into the early summer, depending on how the positions work. But one of the biggest things, the criticism that was coming to the government at that moment in time, was the support to small businesses. And as a response, the bounce back loan was introduced, and it came live on Monday. Much more easier application system. It's all digital. It allows up to £50,000 in terms of loan, which is or 25% of your total revenue that you're generating. I guess the measures were a little bit more relaxed, and there was some really good news over the last couple of days. I heard over 70,000 loans have been issued. I think over £2 billion has been lent. So it obviously is doing something. And before we go into the other side of this session, Nick, it would be really good for you to give us a little bit of perspective from the banking side of how bounce back loans are working and the process is going at this moment.
Yeah, so I think first of all, I mean, one of the features of this particular crisis is just how much things are changing, how quickly things are changing. So obviously the government's first kind of scheme was the CBILS, or the Coronavirus Business Interruption Loan Scheme. That was kind of the first attempt in terms of trying to support businesses with funding. But there was very much a focus around it wanting businesses that were considered viable to be the ones that were in receipt of those funding. And if you look at the timing aspects, that was the thing that was consumed. So huge demand, and it still absolutely is. But what was taking the time is for us to kind of work through and assess those businesses that were viable. You know, if we lend to a business and it actually, when in the shake-up of things, it wasn't viable, then there's no guarantee that you can call upon, because we shouldn't have kind of lent in the first instance. So the bounce back loan scheme actually came into play on Monday. So literally only a week of sort of processing, a week of teams working together to try and get everything all stood up ready for 9 o'clock on Monday. And my goodness me, you know, the floodgates opened on Monday. Just to give you a bit of context in terms of Natwest, so we have had, up until close of play last night, 72,000 applications under the bounce back loan scheme. So, you know, you're only talking 3 working days. It has sort of tapered off slightly. So Monday was just, I don't know the figures for Monday, but it was the lion's share of those applications came through on Monday. And then it's kind of gradually settled down a little bit into sort of what we think will be the norm now. And obviously we're working with those. The vast majority, we're able to get money out the door within the 48-hour window. A couple of kind of glitches, or a couple of sort of points that have come out. So first of all, just little things like, for example, if a customer is known in our database as Christopher, and when they've applied, they've gone as Chris, it's just kind of rejected it initially and just gonna, it's needed that check. So it's just a little bit of data checking that's been part of the course. But also it's flagged up a few sort of scenarios where sole traders are using personal accounts, which, you know, legally they're absolutely quite kind of entitled to do. But then we don't know the business, and so therefore the identification, the money laundering checks that we have to do in terms of recognising the business haven't been done before, and so that's thrown out a few issues with people who hadn't got themselves a business banking sole trader account. So we're working with those to kind of smooth that, get the account open as a priority, and then kind of go through the loan account. But yeah, vast majority will see the funds within that kind of that 48-hour turnaround time.
I mean, this is really positive. I think, you know, it's a big proactive step forward. I think it's starting to help ease and I guess the financial anxiety that business owners would have at this moment in time. I think this whole and I'm going to use the term herd immunity of everyone talking about there's nothing here for us, there's nothing here for us, is going to slowly start to temper itself out. Naturally, I mean, Piers has mentioned this on previous calls that we've had, that, you know, it's better that we have this measure of filtering to protect, you know, the amount of money that we send, you know, we put out, and you know, that we can actually then be able to reclaim back, you know, through loan repayments, etc. in the future. Are you finding that that your businesses are, you know, the businesses are more responsive? Are you finding that they're a little bit more I guess, a little bit more patient with you guys now, compared to kind of some of the news stories that we hear around people becoming very, very agitated and frustrated.
I mean, I think again, there is an absolute balance there to be had. We are working absolutely. I mean, I've got colleagues who are working, literally 20 hours a day, and I have been last week just to get kind of everything set up, stood up, ready to go. So it's not that there's no effort or anything going in. Absolutely, there is. There's a real conviction that what we want to try and do is support as many businesses like that. But there were, it's like, 9:15 on Monday morning, there were a few kind of messages around, oh, can't access this, can't do that. Okay, there were a few issues around the fact that people hadn't had a business account. Well, that best will in the world, that wasn't, something that we'd kind of sort of suggested. So I do accept, I mean, most importantly, you've got a lot of business owners here with that anxiety. I think that's a really good word around the financial position. Still, I think there is a little bit of kind of, there are definitely two camps. One in terms of, great, there's access to a scheme, very easy to kind of process, very easy to kind of get through. And I know that there's a lump of money that I can access. That's kind of one camp. There's this other camp that are kind of saying, well, I know there is this scheme here. However, it's a loan, it's a liability. I don't know when my business is going to pick up. I don't know when I'm going to be able to operate as normal. I don't know whether, my business has changed beyond all recognition. So there is that kind of hesitation, rightly so, as to considering whether actually borrowing the money is the right thing. And interestingly, there are a few business owners that, kind of working through the various schemes and processes where they're coming out of it and they're thinking, I'm not sure I need the premises now. I'm not sure I want the anxiety, the overheads, the fixed costs that go with it. Actually, I'm going to take this opportunity to really change my model, go down the kind of a digital route, be in control of it. And absolutely, we kind of applaud that and understand that as well,
I think the other side to this is that it's not just about the bounce back loan or the C-bills. I mean, there are so many other financial solutions that are out there. You could put invoice factoring in, maybe apply for an extension of your overdraft facility. And I think sometimes small business owners could be forgiven to just think, right, let's just go with what the government's saying, because they've said we're putting 100% back behind this. But you just mentioned it, as the model changes, the need for the money or the type of financial support that you need changes as well. So, if you're looking to move away from officing, for example, or leasing in this perspective, and it takes a huge chunk off your cost, it could become a situation where right now what you have is you've got a bundle of invoices out there which haven't been paid. And that's what's bottlenecking you. And maybe considering going for alternative financial solutions other than just lend it, getting money, even though it's cheap right now, to get that money, is probably going to serve you better, right?
It's certainly, I mean, we always want to try and have that kind of review with a cut, because as I say, it's not a business owner's job to kind of say, I want one of those facilities, I want one of that facility. Business owners kind of say, this is where the funding need exists in my business. What options do I actually have? So when we can kind of understand that, then you can kind of put those various suggestions in place. I think one other really important development actually, so when the bounce back loan scheme launched on Monday morning, there were criticisms of the wider scheme that there were only a certain number of lenders kind of accredited for day one. We've just had confirmed that this morning Starling, TSB, Allied Irish Bank and Co-op have come onto the scheme as well, so they're kind of accepting the application. So for customers of those banks, they've now got an option as of this morning.
Because the other side, and Piers, I know you've been sitting there very, very patiently listening, but I can see that there are a few expressions coming, so I know there are some inputs that you want to put in here. I had a question for you around feeder accounts as well. I mean, I know HSBC were doing something on the fact that they were setting up a feeder. It's even if you weren't a customer of them that they could set up a feeder account so you could apply for a bounce back loan. Are these kind of things right now, again, NatWest's priority, you know, and you can't speak on behalf of other banks right now, is your priority is obviously your customers, your current banking customers right now. But do you see, or do you already have a facility for someone who's not a NatWest customer to come in and actually be able to participate in this type of activity?
So it's very much as you suggested. Our priority is with our existing customers. So they're absolutely the ones that we want to get to support as quickly as possible. There's then this other group of personal account holders running sole trading businesses. So we're trying to prioritise applications for businesses because, again, it's not much a loan process in this regard. It's about identifying and knowing the business that we are responsible for kind of giving an account and a license to. So we need to undertake those checks. The third group then is new to bank businesses. So we will kind of consider that, but we will need you to open the feeder account, the business account, where we do our kind of anti-money laundering and identification checks. They will, at the moment, they will go at the back of that queue. So we won't say we won't help new to bank businesses, but we are prioritising those with existing. And as more of the other banks come on to the actual scheme, I think that will suddenly, that will not become so much of perhaps a challenge as it was on day one.
Yeah. Piers, you've heard a lot of what Nick said, and obviously bearing in some of the news, we'll also be discussing as we go into this what the Prime Minister is going to potentially announce on Sunday as our new measures. What kind of commentary do you have on this? Or
well, I mean, there's a lot to say there. I mean, I think the first thing, go right the way back to your comment about this is a V-shaped experience. I'm not sure I agree. I mean, this is at the moment it's an L shape. And I say that, slightly tongue-in-cheek, of course, but, one of the things that is definitely clear is nobody knows where this is ending. It's not going to stop at the end of June. I read something this morning, a great comment that, coming out of lockdown doesn't mean the pandemic's over. It just means ICU has got space for you in their hospital. So we still have to keep the perspective and keep the context of all of this. And I think, my view on this at the moment is try and be very balanced about it, which is, we are dealing with a lot of businesses that are in a very fragile position, as we know. There are management teams and business owners and entrepreneurs with a great deal of anxiety. And, if you take, the important thing is keeping perspective on this. So, of course, I think the BBLS scheme is fantastic. It's really, really good. And just by virtue of the numbers, as Nick was saying there, about 200,000 applications by Tuesday morning. We're way, I think the latest I saw was about 560,000 as of this morning. 2 billion loans across 70,000 businesses approved in the first 24 hours. That's really good, and that's great. But let's keep a perspective on this. Okay, the majority of these people have ploughed into those loans, possibly with a view that it's 100% guaranteed by the government. Okay, now from a bank's perspective, that's quite an unnerving position, because, as Nick has rightly said, banks will lend to good businesses, and they look at two things: are you a good business, and can you afford to pay this money back? And I would say to, I've got two sides of the fence here. On the one hand, interest rates 2.5%. You can get 50 grand up to 25% of your own turnover. Go for it. If you don't do it, you're mad. Okay, that's one side, because everything about managing a business in these times is about cost reduction and cash preservation, and a combination of those. But as a responsible business owner, look at your cost reductions first. Maybe it is taking out the offices. Maybe it is reducing salaries, letting some of the workforce go, introducing pay cuts. Those would be the typical measures which you should automatically put in place. But don't knee-jerk those, because you've got to look at the sustainability of this. Come back to Nick's point about being able to afford to pay this back. If you chop all your staff and you've lost all your customers, well, how are you going to pay it back? And you've got to be careful that we don't have this sort of out of sight, out of mind mentality, which is it's not being repaid for 12 months. So we merely skip along for 12 months. And by the way, we could still be right in the middle of a pandemic in 12 months' time. Nobody knows. And suddenly you've got to start paying back a £50,000 loan, or even a £250,000 or £1 million loan. So I think keep a balanced perspective on all this is the sort of the first thing I think people really need to look at. But yeah, the other side of this, of course, is this is about survival, and I've talked a lot. You've heard things like survive, revive, and thrive.
Yes.
And different companies are on different levels of that spectrum. Most people are still in the survive mode, and for me, the survive mode process is very much about cash survival. So, as a business owner, and I've done this myself, as you take a view over the next 18 months, and you take your worst case trading position, and then look at your cash burn over that period of time, and make sure you've got enough cash. Because if after 18 months you're not able to resurrect and rebuild your business, pack it in, because you're never going to make it. 18 months, and I've raised money from, various angel investors, from VCs. They all look at the cash runway, and they say after 18 months, you should have figured out how to get yourself back on track. Of course, we will get there, but just make sure that you're not just borrowing for the sake of borrowing, which is a real danger, and you get yourself into a slightly sort of false dawn position where you've got cash on reserve, and that's good for a rainy day, and you start spending it, and then you can't pay it back, and your business is picked up. And the thing that I think I talk a lot to business owners about is about the revenue generation. We're only 3, maybe 4 months into this, as a pandemic and as a crisis. So we've got a long, long journey to go. And the important thing is to try and make sure that whatever you're doing in your business, whether you're pivoting, repurposing, repricing, whatever, you create a sustainable business at the end of it. But we will return to normal at some point, whether it's next year, the year after, whenever. There will be a normality there, and we'll all go back to offices and be down the pub and go to concerts and so on. But the important thing is making sure you've got a very clear survival strategy over the next 18 months. And it's not just cash. Let's be clear about that. It's more important about customers. You've got to get your revenue coming in, and you have to have profitable income coming in. So, it's a chance to look at your business model. You may have reduced margins because you have to reprice things. Your costs may go up due to a difference in demand. So there's a lot of factors here to consider. And I think all the way throughout this is just try wherever you can, no matter what situation you're in, keep a balanced perspective on this and plan. Keep your plans very fluid, very open, because anything can change.
I mean, you talk a lot of sense there with all the planning and keeping that fluidity, and there is still a high level of uncertainty of, especially within this, the next 3 to 6 months, and that obviously puts a lot of pressure on decision making when it comes to providing financial solutions as well, Nick. It's I mean, obviously with what we're expecting to hear from the government or the Prime Minister is that they're going to relax a little bit of the rule right now about how you can go out more than anything else. So maybe it's unlimited exercise rather than just 1 time a day. Maybe introducing this opportunity for picnics, but this whole push, which something Germany has already kind of initiated, which is kind of opening some cafes and bars, allowing them to, those that have the outdoor kind of facilities. So I guess just the question I have here is, does, from a banking perspective, is it just, it doesn't matter which type of industry you're coming in from right now, you're serving based on the applications coming in? Or is there also a priority for some of these types of businesses that currently are going to either kind of look to start kind of reopen in the coming weeks and months, or are really going to be kind of strapped for the next 3 to 6 months? Do you have anything like that at the moment in the bank?
So I think basically the vast majority of the funding requests under that £50,000 mark, they're earmarked for that the bounce back loan scheme, and that's very much what a lot of the business they're kind of applying directly themselves. That's kind of the direction that was set from the top. So actually, the kind of, as long as you had a business that was operating at the end of last year, as long as you have been impacted by COVID, if you want access to that funding, that's kind of the support. So it's kind of, I'm not going to say questionable, but for some it's about just keeping that business alive. For others, it is about channeling it into a new format and a new model. So there are those things. I think probably the sort of best suggestion, we've talked before about controlling the controllable. And I think that's really important, because all of this speculate, I'm going to be a bit personal in terms of the communications around this have got to be absolutely top notch. And where we're sitting at the moment, we know there's an announcement of some shape, form coming on Sunday, but you've got all of these suggestions, whispers, gossip that just control what you know. So let's wait until Sunday. Let's know what the impacts are. But the best kind of suggestion I would make is, one of the worries is that if it doesn't quite work out whenever we come out and whatever shape, form that does take, and we end up being locked down again in, I don't know, 6 weeks' time or whenever, how will your business react then? So have you got a model, an operation where actually you could serve customers in some way, even under the experience of lockdown that we've been through? And I think if you can kind of future-proof the business in that respect, that is exactly the kind of right way in terms of the initial period. Okay, there's another stage beyond that, but that's long into the distance at the moment.
You know, Nick, it's interesting you say that, because, you know, you're absolutely right. Everyone at the moment is crystal ball gazing, and, you know, nobody really has the answer. And actually, to get an informed opinion on this, you need to have data. You know, one of the things which I would really love to see, if it's possible, would be for the banks to come together and say, right, out of the 500,000 BBLS loan applications, could we get some anonymized statistic on what people are forecasting by way of reduction in revenues in businesses across by sector? Because that sort of data will give a perspective to other business owners, saying, well, if the general population of 200,000 people are predicting a 50% decline or a 70% decline or a 30% decline, we get some sense of what people are thinking, and that would really help us steer. Because at the moment, I mean, I've done a number of business application loans in the last few weeks, and you sit there and you have a current P&L and a budget of what you thought you were going to do this year, say it's from January to December, and you literally have to say, right, let's look at our pipeline, okay, and we can see what's dropped off, and we can see, but, you know, beyond 6 months, you don't really know what's going to happen. So in 6 months' time, and particularly for 2021, what on earth do you budget? And it's and I'm being asked almost I have to have the answer for my clients to say, right, they're saying, well, what are we going to forecast next year? And I'm saying, right, well, why don't you just take a 25%, 50%, 75% reduction on what you would normally forecast? And then I throw it back and say, what would you normally forecast? And the point being is no one really knows. And it's so dramatically affected by the circumstances we're facing. So I think to have some data around that would be great. I mean, you know, if you look at the number of business loan applications, and I know, for example, HSBC, they want to see a pre-COVID-19 forecast and a post-COVID-19 forecast. Now, it would be fantastic to have that anonymized data to say, just percentage-wise by sector, who's forecasting what, because that would make a big difference to us. And it's all about trying to keep, as you said, Nick, that perspective, you know, and rather than just flying blind and running blind, which is what we're doing at the moment. Because, you know, one of my worries is twofold. One is the second wave potential of being locked down again, or the pandemic kicking off again later in the year when the flu season comes around. But the other side of this is, you know, this furloughing scheme we have, you know, whilst it's great that we can see, you know, 80% contribution from the government, you know, you won't just be able to shut that off at the end of June, because you're going to end up with people who've not returned to revenues to be able to support their cost base. So the layoffs and the employment market will be so significant in July and August. You know, and I've heard numbers bandied around of 3 to 5 million people being made unemployed in the summer. So the government will have to have some sort of co-op scheme, which is to either reduce the furloughing percentage-wise month by month to get back to normality, or have you pay this, we pay that. So some sort of scheme. It can't just be a bullet. But I think that's a pivotal decision for the Chancellor to make. And it is a concern because, again, no one knows. We don't have any empirical data to know what's going to happen at the end of this, other than at some point in the future, we're going to be okay. But that's not really good enough to plan a business around, and it's not good enough to give the bank the surety you need to say, I will be able to pay this back. So we're in a very difficult position here.
I mean, you can't really. It's difficult to compare it to the recession itself. Now, you know, back then it was the Bank of England that was supporting, you know, the local person or the individual, you know, in terms of where it was going. Now it's the government, and the striking distance or difference that you're going to have in terms of these guys are. Sometimes I get a feel that they're just throwing things at things.
Well, yeah, I tell you what's interesting about this. If you look at this, the circumstance we're in, there are four major components to this. Which is we've got a humanitarian issue to start with, which is a virus and a disease has come across, spread right throughout the world, and is killing people. So that's the first issue we face with. The second is, as a consequence of its virility, you've got a situation where governments have to take an action and say, right, we seriously are in trouble here if we don't deal with this. Therefore, to whatever degree, we're going to go into lockdown. And the measures they've taken have been so draconian that has caused an economic shutdown. Now, the consequence of an economic shutdown causes immediate cash flow problems for particularly FMCG, consumer businesses, retailers, and so on. And there's a systemic effect right throughout the supply chain. So the government have then stepped in and said, okay, well, because we've enforced the shutdown, the third thing we've got to say is we're going to try and bail out as many people as we can and give you as much support as we can. Now, the numbers when I first heard about, the government bailout package, announced, were amazing. But if we look at our sort of GDP deficit this year, it's 57 million, which has dropped from 110 in its peak in the austerity period. This year it's predicted to be up to 260 billion is the deficit. So 4 times what it is now. Now let's remember that money's got to be paid back somehow. That's then going to kick you into recession, because spending's going to be down because we're all debt ridden. So the recession we talk about is a forced recession. Whereas you compare it back to 2008, and Nick, forgive me for saying this, but the banker bashing in 2027 was down to irresponsible lending from the banks, subprime mortgages, which caused a housing crash and so on. The downturn prior to that was the dot-com bubble, where we figured out that 1 + 1 = 7, which it doesn't, of course. And then the one prior to that was a housing issue back in sort of the early 90s, late 80s. So we had all those boom times during the 80s, capitalism, home ownership, Thatcher's governments, and so on. And then suddenly the recession kicked in because everything was overvalued. So we've got 4 very different types of economic downturn, but this one we're facing now, and I don't like using the word unprecedented, but it's a combined accumulation of things. So it's humanitarian, societal, economic, which all of that's leading into recession. This is a big challenge.
And Nick, obviously there were reports out about RBS in terms of its profits that have been almost halved in terms of where it's going. It was almost at $1 billion at one point this time last year, I think, or 6 months ago, and now it's kind of half of that, and it seems as though it's going to have this impact here as well. We've heard about, people think and assume that Amazon, for example, is absolutely creaming it in at this moment in time, but actually they're not reporting high profits at this moment, even though they're even busier. The supermarkets, even they're increasing. The average shop is now gone from 100 to 150 or 160 pounds because they're not doing these kind of offers, but they themselves are not declaring that there's as much profit. What's the impact, do you think, it's having kind of on the bottom line for the banks as well? This is going to be a testing period for you guys, right?
Yeah, I think, we released our quarterly figures on Friday of last week, or week before. 1 week where it merges into the next at the moment. But basically, our sort of quarterly performance, if you compared that to the quarter of the year before, but for the provisions figure that we had kind of allocated, it was pretty much in line. Yes, it was coming from different parts of the bank, but the total kind of profit that had been earned for that quarter was pretty similar. We'd taken the decision to allocate a certain amount of provision because obviously we know that there are, without a shadow of a doubt, likely to be businesses and households that are impacted. The thousands of capital repayment holidays on loans that we've provided, the mortgage holidays that we've provided, inevitably there will be some of those who, ultimately, it just doesn't work out for them in terms of their new set of circumstances. The only other thing I would say, and this probably, well, it does kind of represent all of the banks as well. The capital cushions. I mean, we probably heard about the tests that the Bank of England ran and the regulators ran on all of the banks that operate in the UK. Sort of every quarter there was these sort of reports and testing done. And effectively what we have been doing over the last sort of 10, 12 years is gradually building up our capital buffers, so that just for, you know, I mean, again, no one would have envisioned this sort of impact, but, you know, kind of the buffers, the cushions that we've kind of got are bigger than we've ever had before. And it's not to say that we kind of want to see those disappear, but I think there is at least some of those buffers. But again, you know, we've spoken about the size of debt that government are perhaps needing to consider to see us over. I can possibly see as well, you know, you when you do get back to, you know, kind of the other side of this recession, you're going to have a sort of a real challenge around, do you kind of then cut spending? Do you increase taxes? That's going to be a difficult thing. So I can probably see things like for a year or two, some sort of levies, some sort of COVID, effectively more tax, certainly on some of the corporates, so that it's starting to you know, pay back into the public coffer, because ultimately, you know, this is going to have to be paid for at some point when, you know, things hopefully return to some, you know, acceptable form of normality.
You know, it's a wider conversation piece, Nick, but just to build on that, I think, you know, society has started to recognise in the sort of developed world that, you know, we've just overtraded ourselves. You know, once again, you know, if you look at the typically the equity markets and stock markets, you know, it's all about growth every single year. We have to have growth. Well, you know, sometimes that can't happen, you know, and just for normal reasons, because you can't just keep going up and up and up, because whatever goes up has got to come down.
Yeah.
So, you know, in a way, it's great, you know, and I think it was Basel III was the banking regulation from the last downturn that said shore up the capital reserves in banks, you know, and create that buffer, which is great, because of course, if we didn't have that, you know, where would we be now? But just another point to add to what you said, I think it's important for businesses, and, you know, a lot of small business owners ultimately are entrepreneurs, because, you know, they all started their own business because you want that financial freedom, you want that, you know, that opportunity to go and call your own shots and be your own boss, and that's where you want to go, which is great. And I'm the world's biggest advocate for entrepreneurialism. But with that comes a responsibility. Okay, and the responsibility is this: you're accountable for your own performance. Don't blame anybody else. Don't blame, you know, downturns in markets. You know, it's down to how hard you want to work, and how much effort you want to put in. And I know that is a generalization. There's always an exception to that. But it is not the job of the banks or the government to look after your business. They will help as much as they can, but I think business owners have to take a large proportion of responsibility here, and just be accountable to yourselves to get yourself out of this mess. Because the banks are not the answer, the government is not the answer, you are the answer. You know, and we had that great call with Brad Burton the other week, and he says, absolutely, the cavalry's not coming. You know, you really have to look after yourself. But of course, use the opportunities and the resources around you, but don't rely on it wholeheartedly. You know, I'm right now, it's interesting, I'm going through with a couple of my clients a rebudget. So when we first looked at the downturn, we got into lockdown, everyone scrambled to assemble P&Ls and budgets and get our, you know, if you roll forward 6 or 7 weeks and look at what's changed in the marketplace, by now most people have spoken to their customers. You know, they speak to the staff regularly. They've got a much better handle on what the cadence of this is looking like. So now is a very good time to revisit your budget. What you thought was going to happen 6 weeks ago may well be quite different to what you think now. So, you know, I'm encouraging people to be, you know, be responsible to yourselves. You know, don't just go and borrow a load of money and stick it in the bank and hope you can get through it. Sure, explore that, but look at it in the context of your plan. You know, your P&L and your budgeted plan will tell you what cash requirements your business requires. That may well have changed. It might have gone up, might have gone down. But again, it comes back to the point you made at the outset about perspective on this.
And just this last bit that I want to kind of just touch on, and I do want to kind of explore this Corona canvas that we've been looking at, or Nick, you've been sharing. It's a fascinating little tool that But I read a recent article about, obviously, RBS are looking to rebrand to Natwest eventually at some point. It went on to talk about the fact that it's approved about 1.6 billion to almost 8,292 businesses on the CBILS program. This is not the bounce back loans. Around about 31% of the total lending that's gone out. And there's a comment in here where the CFO, Casey Murray, has said that while CBILS would not be hugely profitable for the lender, she expected a nominal return from the loan. How, just this kind of perspective, I think it's really good for people to understand, that it's not just as straightforward as 100% backed or 80% backed, and away you go, and then you lend on this. This can be a really expensive exercise for the bank itself. So when they say nominal return, what does that say to you? What do you think that means?
I think effectively, if you take into consideration that we're like any other business, there are costs involved in the service that is provided, and just because it's kind of cash, via a computer, I think that's a perception out there. Kind of people will quite often understand very different things. So I think the first thing is around what they call the net interest margin. Mm-hmm. So there needs to be a difference between the money that we charge to customers who borrow from us versus those who save with us, and therefore the credit interest that we pay out. So that's kind of the first thing. But the second thing is around assessing applications. For example, the CBILS loan, which is very much a key part of the support that's going out to businesses right now. There's a heavy amount of assessment that needs to go into that, and obviously that's going to take resource and time. There's also the ongoing maintenance. So when we lend money, there is a certain amount of that capital that we spoke about before, which has to be kind of locked away, because we have to assume that a certain proportion of them, will turn bad, and therefore we know that we've got some capital there to prevent that, crippling the wider bank. And I think then the third sort of aspect is then the future. So all being well, the vast majority of these loans will be repaid, whether it's within the first 12 months or whether it's in the next 6 years, repaid very much in line with plan. But there will be a number that won't, sadly. And so the recovery side of things is very much about, that's a hugely intensive part of communicating with a customer where distress has been seen, trying to understand what their new scenario and financial position actually is. Can we reschedule that liability? Can we sort of understand how that might work? So all of that kind of has to be brought into the whole kind of operational costs of providing that particular facility.
Yeah, I think just the way you kind of open that out and unravel, I think it's really important that business owners or people that have this kind of very simple thought process of it, like you say it's cash and it's just done digitally and put into your bank account. There's a lot that's kind of riding on this, that has, that you guys have a cost to lend that money. You've got a cost to retrieve that money. You've got a cost when you lose the money. There's an ongoing cost all the way through this process, and I think this just re-emphasizes that point, Piers, that you talk about, the fact that we're being a lot more, as a country, we're being a little bit, I wouldn't say strict, but a little bit more sensible with how we're lending this money. So it's not reckless, like you've kind of attuned to what they've done in the US with forgivable loans, etc. But
only because it's got to be paid back. It's like if you're just robbing Peter to pay Paul, that's not helping anyone.
No.
And you have to look at long term. And I look at it from my children's perspective. So I've got 3 late teen, early 20s children who are coming into the workplace, and they're joining the workplace in the middle of one of the biggest downturns we've ever seen.
Yeah.
So yeah, it's a very daunting prospect, and I do think it's about being responsible and sensible to the best we can.
Absolutely. So, with the last few sort of 5 to 10 minutes that we have together, I wanted to bring this up. I saw a post from you on LinkedIn, Nick, and I looked at this straight away and I thought, oh my God, this is brilliant. I took a snapshot of it. Credit to the guys that have actually built this. But there are two areas here that I wanna share with you, talk about, Nick. One is obviously this canvas, and the other side is this business recovery checklist that NatWest is doing as well. I saw that you guys have some information on a hub as well that people can get to, which kind of gives them a little bit more of a checklist of the things they need to start thinking about as they start to get back into business. So looking at a business model canvas as it is, it's been adapted for Corona. What I've done is kind of broke this down, and I thought it'd be really good for both you and Piers to kind of just talk through these little elements from your perspective over the sort of next 5 to 10 minutes. So as they come up, just give us a little bit of insights into these areas, and I think this can give our audiences an opportunity to start thinking about how they should start canvassing or building their sort of model canvases. So let's start with key partners here. Can
I just make a general comment here, which I remember when this came up before, then the business model canvas in terms of these key components or pillars in the business is a tried model already. Mm-hmm. And I think the biggest value that this brings immediately is more of a thought tool. So it gets you to rethink about these individual components in your business, not necessarily making sure you have to change, it gets you to think about them. So like today, key partners, lots of hows and whos and what ifs, which is really, really good. So this is extremely powerful, and I'd absolutely recommend anyone to go through an exercise like this.
No, absolutely. Yeah. Which is why I felt it's really, really, when I saw Nick, you kind of presented this, I thought immediately, this is something that, obviously it's quite self-explanatory as a canvas, but it's kind of just talking through a few of these kind of points is it just gives a little bit more context to how people should be thinking about these areas. So when it comes to kind of things like key partners and stuff like this, I'll kind of just keep the flow going. You guys just keep bringing some stuff in, if that's okay. Do you want to start, Nick, with this area here?
Yeah. So I say I'll just add quickly the reason for the business model canvas from my point of view on the whole is because quite often when people are launching a business for the first time, they kind of got burnt in their minds that they've got to do a business plan from business studies when they were doing GCSEs back in the day. And so the sort of trapdoor that often people fall into is they've got that vision in their mind of what their business looks like based on their preferences and tastes, and that's kind of what the business plan is. The benefit of using the model canvas as a wider technique is that you take in the views of the stakeholders, of customers. You kind of validate, actually, was your view the right view, and is that what the market supports? So moving on to key partners, it goes without saying that we've got all sorts of stakeholders that we may be thinking about. It might be a landlord, it might be investors, it might be your team. There's all sorts of different people and constituent parts here. And it's kind of reflecting on the current situation. How have they been impacted? What changes have they had to make? And how do you fit in with those particular changes? So is that something you've got to adapt to in the short term? Is that something that is actually going to be a long-term blip? Is it actually we've now got to find the time to find an alternative supplier, for example, because actually the one that we used to rely on has gone bust, or they've kind of completely moved market. So key partners is always going to be a key driver to all of that. Key activities is then a real sort of fundamental root and branch review of actually what is it that we do. How has that been needed to change in terms of our customers? What is the kind of need of a customer? So a really good example was a kind of a personal trainer that I work with, kind of done personal training, gym sessions, etc. with everyone. And kind of what he moved around to was the fact that a lot of his clients, whilst they weren't able to kind of do the personal training, they could do things online, but he actually navigated as well an additional niche to do some sort of lessons or some sessions that included the children. So actually it kind of solved the problem that mum and dad were having in terms of PE and educating children at home. So actually it was a relationship they already had. He was able to kind of pivot towards adapting his service for that. So again, it's about understanding what changes are needed and whether that actually fits in with your wider sort of model as well.
I would also add to that, Nick, to say on the activities that, you know, it's important to recognise what's sustainable. So adapting and changing might be a temporary measure, but work out what's going to be a permanent measure.
Yeah. No, I quite agree. And I think key resources obviously boils down to it may be funding, it may be skills, it may be premises, it may be technology, but it's really thinking about, okay, we've got the business as it sat previously. If we are intending to make some of these changes, what are the key ingredients that we need to make it? What we got at the moment, what can we kind of compromise on, but equally what are we missing, and who and what do we need to find in order to plug that particular gap. So that's a key bit as well. Value proposition, I think this is really blunt, the pivotal part, because so many businesses are driving their products, their services online, and rightly so. And it's our job as a business owner to make sure that the market, the customers are clear on why they should be buying from us versus, you know, elsewhere. So it may be that we make it particularly convenient, might be that we sort of play on the being local sort of aspect, because that might be a particular motivating factor for our customers. But yeah, what is the value that we are deriving? As I say, it's very much down to us to ensure that the customer is aware of why we are different to the competition. If you let them try and work out for themselves, you'll lose them. So that's a key part as well. Customer relationship, again, is really key. Touching point and talk to our customers. So those that we've perhaps had as established customers previously, kind of staying in touch with them, adding value, understanding how their worlds are changing, and seeing whether actually our new service, our new sort of amendment actually fits in somewhere different in their lives, but also start to understand when they're sort of thinking of coming out of the restrictions, whether there's a part that we can play within their sort of new way of life. And then the channels, this is primarily all about the marketing aspect. So how is it that we're going to continue to work with them and to message them and communicate with them? Has that actually changed hugely as a result of some of the restrictions, or actually are we kind of going down to some more traditional methods if perhaps more local aspects are really key and key drivers for our customers? So yeah, considering how the channels and how our communication method may well have changed. Then the cost structure, again, we spoke about the importance of cost, really reviewing what has changed. There may also be an element here in terms of the sort of buying cycles that we used to rely on. They may well have been disrupted. So, you know, we used to be able to dispatch a product within 72 hours to a customer. Well, actually, because of certain disruption, does that mean that we've now got to extend that and be very clear with our customers in terms of likely timescales before they have that? But I think what we are definitely finding is that a review of costs on a very, very regular basis is absolutely imperative, because you've got certain things that are going through the roof and you've got certain things that are falling sort of quite rapidly.
And just to add to a lot of the generality of this, so one thing I'm doing with a couple of clients at the moment is using a red, amber, green mechanism based on this. And, you know, you've heard me talk about now, near and far planning. So anything that is sort of, you know, red is kind of a now action. Anything that is a sort of a near-term issue, opportunity, or action is amber. Anything that's long-term, unchanged, or doesn't need addressing is green. So when you look at each of these, you know, when you delve into a deeper element of it, think about what is sort of red, amber, and green in terms of priority, because there's a lot to take on there, and just planning it and prioritizing it would be something I'd recommend.
Yeah. I think it's generally speaking, it's a really good tool for business owners. Again, it's kind of, what is it that I can look at? What is it that I can control and research and consider? Here you've got actually almost like a to-do list. You know, these are the things that you, based on your relationships, based on your market, on your sector, these are the things that you kind of need to factor in and think about. And I think that then gives people a kind of a highway, if you like, in terms of that's the road to head down in terms of finding out what your business shape is likely to look like. Certainly in the short term, whether that evolves in the medium term, remains to be seen.
I think it's a brilliant tool, and exactly how you've kind of lifted out all these different areas. It's perspective. It asks the questions in the right way. But I like actually, Piers, what you brought in just now about that kind of red, amber, green as well. Being able to assess how effective it is, because that gives you a visualization on top of your canvas.
Just to add to that, I've got one client who I'm working with at the moment who does something very similar to this, and they're planning to do it every month. And I think that's a really interesting exercise because we're living in such enormously changing times. You have to have agility. You've got to be agile in your thinking. Yeah. So for someone, there's probably 3 or 4 hours of good solid work involved in pulling that together right now. Yeah. And if you can do that once a month, if you can take half a day a month, do it over a weekend. It's your own business. Do this each month and just see where the comparisons and changes are, because it's a good solid support tool that you can own yourself. And if you want, I no doubt Nick has got some advisors. We can all advise and help on this if anyone wants help doing it. And I'd love to be. I'm very adept with things like that, so I'd be delighted to go through it with anyone.
And there you have it. There's the opening offer from Piers, basically. Let's see how many of you take that one up, right?
Absolutely, a really good idea to kind of share some of the things. If you've got like-minded entrepreneurs within your network, kind of share what you've done, what you've found, what sort of changes you're making, because I think that can really inspire others to kind of think about things that they just hadn't entertained. So that's a productive use.
If I can, just on that point, Nick, if I'll just a small punt for something which doesn't have any money associated at all, is I've just joined an organisation a movement called All Together. And this is a pro bono offer from about 80 or 90 very, very adept business leaders, extremely competent. And all of us are offering completely pro bono support and advice services to any business that wants it. And we're talking about people who founded, owned, built, businesses like Innocent Drinks. They have the owner of Gaucho Grill. So there's some amazing business. Just have a look at alltogether.company. And you'll see about 80 people, and you can request to meet with any of these people. Yeah, and they'll help you.
It's an amazing initiative that they set up, and the collective group of people in there is amazing. The value of,
including myself, Kat.
Yeah, exactly that. I know that they predominantly were on beta version. We're looking at businesses 5 million plus, but I think it's now opening.
It's companies. Ideally, it's 1 million plus, but the principles are, if you're a good business, and they also, what I like about it particularly is they focus a lot on the hospitality, retail, food services sector. You've got a lot of companies in there who are small operators who maybe in retail and their businesses are being collapsed. But there is free resource just waiting to help.
And there is more and more and more of these resources. But one of the things that we have run out of today in resources, time. I think we've come to the end of this session. Fascinating conversation, great insights. Nick, I really appreciate you coming in and kind of being so open and transparent about what's going on behind the scenes with everything from the BBL, the C-bills, right the way through to the challenges that you guys as a business and a bank are having. I really found that canvas, the Chrono Canvas, as a valuable tool, which I think we'll make that available basically as a download for anyone that wants that. But I know you guys also have your own kind of resource centers and stuff like this. I think there's your COVID-19 mentor hub or things like that you guys are running from the group itself. Could you share any details for anyone out there that would like to kind of get access to this?
Yeah, absolutely. NatWest Mentor is a service. So our one of our sort of teams look after supporting around employment law, around health and safety in kind of normal circumstances. What they've pulled together, and I shared it on LinkedIn last night. More than happy to do so again through yourselves, through your network. Is a checklist. So it's kind of imagining that we're going to come out of some sort of lockdown. It's really thinking through the premises, around the staff, around the training. What do I need to have all checked out before I can start opening the doors again? It's a really kind of action list. Again, there'll be some perhaps red, amber and greens there in terms of things that, already done, sorted, but some things of action before we do start opening up again. Because again, just, lifting, if that is what is agreed, then that's not necessarily going to be right, fling the doors open and carry on. There is going to be a substantial change to many operations, many business environments that, kind of need to understand first of all, and adhere to, and there's a guide there to be able to do that. So through NatWest Mentor, but I'll share that again through your
Yeah, no, it's exactly that. I picked up that document, and it's just the attention to detail, the little things that you need to, you may have kind of take for granted, or in the rush of trying to get your business back open, you could forget, and it's a fundamental thing that will create a major crack or fragment in the business itself. So look, I really appreciate you both coming on today. Obviously, Nick, by all means, send us the details for the NatWest Mental stuff, and we'll get that out into our network. Piers, obviously, there is that open opportunity through altogether.company as well. Is there anything else that you'd like to sort of announce, how people can get in touch with you and stuff like that at all?
Well, yeah, I mean, as I've said before, I mean, I'm the only Piers Mummery in the world, so I'm actually quite easy to find. So search me up on LinkedIn, type me into Google, you'll find all sorts of great stories about me, hopefully nothing too many skeletons there. But, I always say, look, don't stand on ceremony, pick the phone up, ring. If you want to talk, I'm absolutely happy to talk to anyone, and I'm happy to help anyone, because I love business. I'm passionate about entrepreneurialism, and now more than ever, people need help. So if you want a perspective, and I will definitely have an opinion on pretty much anything. And I also will say, from an empathetic perspective, something that, no disrespect at all, Nick, but a lot of the banks don't have. They don't have ex-entrepreneurs who suddenly move into banking, but of course that's to do with their risk profiles and their backgrounds. But my background is I've been on the coalface. I have owned cafes, digital media companies, garden centres, marketing agencies, services businesses, and I work with an enormous support network. So I've got a lot of resource and hopefully a few nuggets of wisdom to share, and I'm very, very happy to help anyone. So just ring me.
And Piers doesn't have anything to do with GDPR because he puts his number and everything all over the place, basically. I mean, if you could give him a big billboard up the A40 or something like that, he'll probably have that all the way across.
Exactly. I'm very happy to help anyone.
No, brilliant. Look, gentlemen, I know it's gone a little bit over time today, but I think it's been incredible. I really, again, want to appreciate everything that you brought to this session. Long we may continue these kind of conversations as we come into Nick. We've got you coming back a little bit later on into the summer now, which is going to be interesting to see how these kind of changes have been and what changes and effects have been coming in. But that's it. That's a wrap for today. That's a wrap for this week, actually. So it's been an interesting week per se with our range of webinars, everything from culture and change management. We've gone in and talked about digital strategies and how to communicate during this period, right the way now to this really nice, simple process that you can bring out and start visualizing and starting to put the priority into how you'll model your business into recovery. So Nick, Piers, thank you very much for joining us, and for all of you that are watching.
Can I just say one final thing, just in case anyone's forgotten? Tomorrow is a bank holiday.
Yes, tomorrow is a bank holiday.
I mean, never have I been less excited about a bank holiday, because it's another day to me.
But that doesn't mean Even though it's a bank holiday, that doesn't mean Nick and his team are not going to be working. Watch, they're going to be working through.
Absolutely, I know. So anyway, listen, a very happy bank holiday to everyone. Have a great weekend.
Absolutely. Have a brilliant weekend, everyone. For everyone in the UK that is watching this, have a brilliant one. And Nick, sorry, it's a bank holiday, but you're going to have to work through it, unfortunately. And we'll catch up with you on the other side. So
many thanks, Kat. Thanks, Nick.
Bye bye.